welcome back to the RationalInvestor.com's Daily Brief Recap. And actually, I forgot to load the YouTube page, so give me a second here while I load it. And as soon as I hear the voice of that announcer guy, then I'll know that I forgot to load the YouTube page, so give me a second here while I load it. Okay, so welcome back to the Frivolity. It is Thursday. It is October 3rd. Today's baby powder report day on TRI. And we had an awesome presentation by Julian today out of Thailand, showing us a whole bunch of really cool ideas from his perspective, what he's seeing in the market. Really great application of the RSI tool. He's a big fan of RSI and Keltner channels, and Tom DeMark's counting methodology, which I really like, because there's no really one way to trade the market. What the right way to trade the market is the way that works for you. And so Julian's taken a lot of time over the past few years to try to really figure out what tools really speak to him. So, if you are interested, pop on over the site and check out his report. Our little 10-minute summary here, the dashboard seems to be doing its job pretty well. In that, breadth rolled over in the broader market there back, middle of September. I was humming and hawing cycle-wise about wanting to be short, through the end of September. And sure enough, the cycle seems to have proved itself pretty accurately here, in that the market's just melted down here over the past week or two. So got to feel pretty proud of that. But long and short of it here, we spent some time in the broadcast this morning talking a little bit about maybe sell the rumor. We had big econs come out in the States today. It was the ISM Services report. It showed contraction, but it didn't show, I beg your pardon. It showed a decline, but it didn't show that the services sector itself is in contraction like the manufacturers are. So as a result, I get the impression that sort of was like a sell the rumor. The headline came out, it was ugly, but when people looked at it and said, well, it's not contracting, it could have been a lot worse, and we get almost like a buy the news. So I think that really sort of frames my expectations out of today. Keep in mind that my cycle thesis goes on basically into the end of the month, and we have some big fundamental unknowns happening. I heard that trade representatives from China are going to be arriving in Washington over the next week. We have Brexit uncertainties, and there's one more big event happening here into the end of October. It's just slipped my mind right now. But the long and short of it here, this is going to be a bumpy month, no doubt about it. And we started right out of the gate with a big dump. Ironically enough, I could actually, believe it or not, look for a counter trend rally back up top. But we'll get to that in a bit. So as you can hear from the blings, I'm already over time here. So as always, we want to look at, US dollar index to sort of frame our expectations. If you are a stock market bull, if you are a risk-on bull, then ironically enough, you'd actually like to see a top in the US dollar. I've got on the daily charts, and you can see that the daily just fractaled out. So on that ISM report, it makes sense that this fractaled out because the economic number was just a train wreck. And so then that maybe means that the Fed has got to start lowering interest rates. And we've talked lots about how the fact that the American interest rates are much higher than the rest of the world. So as a result, everybody's just piling into the US dollar and parking their money in T-bills. So, on first blush, on that economic data release, we had a daily fractal fire. And these are higher lows. We could even just draw a simple, just real simple line off of these levels, and you can see where sort of key support is on a daily basis. Could we get a dip into these lows here? Completely understandable, and given the poor econs, I wouldn't even be surprised, to be honest with you, if the Fed comes out and actually says, we're going to give you an extra quarter point here as a treat. And the stock market just loves that and we go back into risk on. But we'll see how it goes. Off of the weekly charts, we're still a little bit early to call a top on the US dollar, since this week we did go to a new high. So on the weekly charts, at best, I have to wait for the end of next week and then the beginning of the following week after that to actually see if we've actually fractaled out on a weekly basis. So signs of a daily top, which is encouraging. Maybe we get dead cat bounces in a lot of these risk type assets. But no signs of the weekly fail just as of yet. So speaking of which, as I had sort of said, stock market was going into sort of panic mode there yesterday. Sell the rumor. Manufacturing data came out horrible. Whole market was anticipating a train wreck out of the services report. It came out ugly. You can see they opened up the market slightly higher and then dumped it even further on the release of that report. Then once the report was done, and interestingly enough, it happened like literally almost perfectly cliche, because we always say you never want to trust like the first hour of trading on any session. We call it affectionately the kill zones. And notice that there is the first hour of trading for today's session. So, 6:30 right in here, beep, the market opens up. It's feeling pretty positive. That report comes out, massive dump, right? Run out all these stops. Anybody who thought, hey, I'm going to buy that, maybe it's going to be a good report, they all got bitch slapped. In comes an inside bar reversal, and back up we go. So, fantastic analogy of don't trust the first hour of trading. Also notice, too, the other sort of risk-on kind of proxy, crude oil, followed suit with the stock market, dumped on the open, but then put in the inside bar, and back up we go. How far does this rally take us? That's tough to say. Through Julian's baby powder report, we did see that there's a fairly sizable open interest in put options up top here, but there is a lot of open interest in calls way up top here, like 295 and higher. So my hunch is, they say usually Thursdays is the fireworks day in the market. So there's your fireworks, big FU, probably created divergences on these dumps. Then they're going to take the market back up so that anybody who panic bought put options here, those puts will expire worthless, yada, yada, yada. I've heard it 100 times from Brian before. And then tomorrow they just quietly park it somewhere up in this area right around that big put open interest. Risk on is trying to find a bottom here after getting absolutely drubbed over the past week. Both Bitcoin, crude, stocks. You can see it's, especially stock-wise, they're trying to find a bottom here. Crude and Bitcoin themselves haven't quite bottomed here yet, and crude is still the weakest out of the three. Interesting to see the risk off proxies are all still moving up, and that's sort of this conversation over here. You've heard Brian talk lots recently about how I was thinking about hunting short setups, that's basically this chart. So you can see bonds have worked their way up into trade location. We still have this AB equals CD, and interestingly enough, I actually had like an algo signal off a lower time frame signal bull in here. So I think we're probably best not to step in the front of this, especially with all these gaps right here. So let's see how the bonds act up here. The yen, again, just insane wicks and tails. So it almost looks like a megaphone is forming on the yen. So very, very dangerous stuff. And not really in trade location either. And then our gold, right, worked its way up, almost got to Mountain Man, but I want to get a nice rally into reload zones. Ideally, actually, I'd like to see this gap filled in up here, and then a nice polite failure up top here. So I'm still waiting. And if anything, stock market malaise, maybe, we have to do like a few sessions of risk on, which brings maybe the bonds back to fill in the gaps, the gold to fill in the gap, whatever. I still think this trade's probably like a week or two away at best. All right, so that's risk on and risk off. It's kind of interesting. I was going through the list of Dow stocks, wondering, who was it that was going to knock the market down, and the area of the market that really caught my attention here on the downside was the industrial sector. And I guess it makes sense, right? The manufacturers are the ones that are feeling the pain. And, I thought just for illustration purposes here today, I'd show you what some of these weekly failures look like. Beautiful inside bar. So ironically enough, the fail on something like DuPont came in last week. And this week's action, ironically enough, just does nothing more than take it down into the bottom end of the trading range. If we look at something like 3M, same sort of thing. Inside bar 2 weeks ago, the sell signal was actually last week, and now, and it's interesting with something like 3M, we are breaking to new lows here. So, interestingly enough, this inside bar concept that I talk about at length with the community, extremely powerful stuff, especially off of things like weekly charts. And then finally, I threw on UTX, and same sort of thing, inside bar. Failure last week, and everything that you're seeing out of this week, Dow off 500 points, all that kind of stuff, Dow falls 1,000 points in 3 days, all that. All we're doing is just bringing price back down into the bottom end of the trading range. So I thought that was just an interesting illustration of sort of who's leading the bear charge on Wall Street, and I think it's very much a conversation about the manufacturing sector within the U.S., and that ISM report. This is sort of where technicals meet fundamentals, or what we call rational ideas. So interesting illustration there for you guys of inside bar failures on the industrial stocks here. Heading over onto the corn. Not a heck of a lot to report out of the corn itself. Of course, we've talked, this is a daily Coinbase chart. We've talked recently about, oscillations around this 8,500. That was that big GAN level that we expected the market to dump into this week. So, seeing this back and forth here, that story's actually getting a bit old now. I think just in the short term, really simple, think look left. This wick right up here, it's got a whole bunch of trap bulls in it. These tails got a whole bunch of trap bears. So this wick up here represents, motivated people who bought and are trapped and want to get out. So notice that rally peak right into the candle body level there. They didn't even give them any release there. Same sort of thing on the downside. Big tails, you can see this dump here afforded these people the opportunity to get out. Clearly there's selling interest up in this area. Somebody knocked the market down here. There's buying interest down here. So I think in the short term our trading range is about $1,000. Right, about 7,700 up to about 8,700, and big surprise, we're oscillating right around the middle of it. I will say off the daily charts, boom, 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 that is a bearish fractal that just fired here today. And on balance, I would be looking for, a serious test of these candle body lows, but maybe even a bit more exploration of these tails. We talked recently about how, yes, this market did move to new lows here, so that created divergences. You can see the volume divergence. The selling bars are a lot weaker, even though price is making lower lows, that kind of talk. But I'm a little concerned here because when we looked at like price momentum divergences, they were very steep. And so I said, okay, fine, divergences are in. Now you got to show me a W. Now, the good part about this is that we might actually be carving out a harmonic pattern here. And if we can come down into like 78.6s, and really this can go even all the way to 88.6, but just for illustration purposes, if we can come back down against these candle body lows, hold them, and then turn back up, that might be an extremely powerful bigger W, and that's the kind of W that I want to see to actually mark that this thing is actually bottomed. So keep your fingers crossed, Bitcoin fans. But at the same time too, as I said, if we look at the higher time frames, we just fractaled out. So whatever that sort of 4-hour bullish divergence that we talked about there yesterday and previous days, whatever that was, it's played itself out now. And now we're going to come down and seriously find out whether we've actually bottomed here or not. And, for whatever it's worth, just very briefly in the daily brief, I talked about, guys, I wouldn't have a problem if people actually started hunting bearish bot setups now through here. It's going to take some time to develop. This isn't going to happen today. But all in all, we can actually start now. We've got a bit of a consolidation. We can actually start thinking about setups going both directions. Okay, so that's basically your Bitcoin summary. Just wanted to finish off with a quick shout out to the good people last night that I did a show with. I don't know whether you had the chance to watch it or not, those people that watch this YouTube channel. I used to do a show with the people at Coinigy and good old Da Vinci. Everybody knows his fun face. And Alex Stirk of Ubik. And we did another episode last night. So check out the Twitter feed or go to the YouTube channel. I don't know whether I have this on our channel. I'm not quite sure how to do that. But in essence, there is the link. Maybe I'll put the link in the YouTube comments here for you guys today. But long and short of it here, Alex Stirk was on the show yesterday talking positive things about his coin. On balance, this is the kind of opportunity now where I think that you can definitely say the fluff has been taken out of the market. That's over. And what you really want to hear is, is there developments going on? Like, are you actually doing work to move on to the next generation? And last night, we didn't really look at price charts. It was just more of like, hey, I haven't talked to you in a while. What are you guys doing? What's happening in the space? Talk to us about development and all that kind of thing. So I thought I'd just give a shout out to Alex. The interesting thing about this is, there's a world of profit opportunity here. It's just really a question of what's your time horizon. For the traders, zooming in off the lower time frames, nice and close here. I thought it was interesting that a couple people pointed out, and I like to look at these names versus USD. It's just me. You can look at them versus Bitcoin too. Some fantastic price action on a couple names that are on the Ubik platform. So Alex also did talk about, just an FYI, if you do happen to own Ubik, there's a governance thing coming up here. So he suggested to take your coins off of your exchange and put them in your wallet so you get like governance credit coins or something along those lines. So it was just a really good opportunity to just sort of touch base with the altcoin sort of core community and just see how things are going. And it's encouraging to see a couple names that are being run off the Ubik platform are catching a bit of a bid here of late. I've always been a big fan of this Geo. And it's interesting to see that Alex's coin here is just sort of bumping along the bottom. I definitely think we have trade location. Do we actually have 3 reasons to justify a trade? I don't think so. But at the same time, too, just sort of an FYI, it was a great opportunity to just check in with the actual core community and just see how things are going for them. Okay, I think I'll leave the daily brief recap at that. Some interesting ideas for you to chew on and what I'm sort of seeing in the market. All the best. Have yourselves a great day, and bye for now.